Ladies and gentlemen, welcome to the Fiscal Philosophy YouTube channel and happy Friday. And it is an especially happy Friday given the run that this stock is on. TSS Inc., or TSSI as the ticker symbol would indicate, is Total Site Solutions. What solutions do they provide? Well, we're talking about integration solutions, of course. What does that mean? Well, the internet as you know it today, whether it be Google's Gemini, ChatGPT, Amazon Web Services, all of this storage and computing power that we rely on for this digital age that we now live in, and especially the new cutting edge large language models, require an enormous amount of machines that are all networked and integrated together in basically giant either data centers or mainframes or whatever in order to power what we see every day when we boot up our computers and look at our screens, or when we are just randomly asking stupid questions to ChatGPT on our smartphone or whatever, Grok if you're a Twitter or Elon Musk fanboy. So those machines basically have to be integrated together so that they can be installed and work when they are sitting in these various facilities. That is what basically TSS does. And I'm probably not giving the most technical explanation because I'm not a tech wizard of any sort. But the basic beats are there. And if you believe that the demand for this computing power, etc., is going to go on a certain trajectory. And I've seen projections from different experts that say our demand for computing power is going to keep growing substantially over the next few years. The demand then for someone like TSSI, who are experts at integrating these pieces of hardware quickly and efficiently, you could see how their services would be in greater demand as time goes on. They have a customer that they don't really talk about directly. They don't say their name, but it's probably Dell. That's what the consensus is amongst shareholders. And that's where they get the majority of their business from in this way right now. However, could you see a world where maybe Google or maybe Meta or one of these other hyperscalers perhaps gives them a contract at some point? Now, even without that, they have a new facility that's going to expand their capacity, and they have a lot of runway with just their existing large client. So this top line growth is absolutely bananas, okay? We're at about $99 million in the last quarter, compared to much smaller numbers that barely even show up on the chart last year by comparison. I think they said that it was like a 500 and something percent growth over the comparable quarter last year. That seems right. So this is just absolutely insane. And I don't want to glaze them too much, because if you listen to the conference call, the people that called in, it seemed like they would let just about anybody call in because they don't really have formalized analyst coverage on their company. So the glazing they got from the call-ins was just absolutely insane. A lot of it was just people who are small retail investors calling in to just kind of give the management the old reach around kind of treatment. All right. So, but this is impressive. I'm not trying to downplay it at all. In fact, I have a ton of shares. Well, not a ton of shares, but some shares. A pretty good amount for the sort of risk of the fact that this isn't quite 100% proven yet, though they are executing, and this is the proof's in the pudding right here, right? Now, I want to check and show the bottom line as well, because I think we're seeing a story that this is not the company that it was a year ago. Now, I would like to take the opportunity to talk bottom line. This is earnings per share diluted. Since last June, they have doubled earnings per share. And their new facility by the way, which has several times the capacity of the current facility, has not even begun to reflect on these numbers at all. So you could see a scenario where EPS actually doubles or even triples from here on a quarterly basis. And I just want to ask you one thing. If a company like TSS, which is a small cap, rapidly growing, reached, say, $1 per share in annual earnings per share, right now, the company's at about a 15 times multiple of that. Do fast growing small cap companies in technology on the cutting edge stay a 15 multiple a lot of the time? I don't really think so. I really think that this is potentially still a lot more to go from here based on these numbers and how the market tends to view cutting edge tech companies that actually have some substance to them. And these are real earnings. And this is based on about $3 million of net income. So this still is not like a very big company, right? We're $385 million market cap. Would it be a huge stretch to say if this number goes up another double from here that they reach maybe $1 billion market cap at some point in the future? To me, it's feasible, right? Because if they doubled this, they'd be close to $1 a year in EPS. And again, I just don't think if they are at that point still growing pretty quickly, I don't see this as a boring 15 PE company once it starts to really take off and actually get the attention that it deserves. So there you go with that. Take of that what you will. We can't really look at analyst estimates because they're not very widely covered. And this is mostly held by small retail investors like myself. Remember to do me a solid and let me know in the comments below if you have any TSSI or if it's on your watch list, what your target price is, etc. Also, make sure you like and subscribe. Help me out with the algorithm. Also, make sure you catch me on the Discord, linked in the description, and on the Cashflow King Live channel every Saturday at 8 p.m. Eastern, where we talk about stocks all the time. Here on the main channel, trying to get a little bit more consistent. Help me out again in the algorithm, and thank you once again for watching. Take it easy, everyone.